The world's most known index fund, the S&P 500. Historically, it averages a 10% return a year. Meaning if you invested $10,000 10 years ago and kept investing $200 a month, you would have invested $34,000, which would have turned into $64,187 thanks to compound interest. How amazing is that? Before we dive into what the S&P 500 actually is, consider leaving a like and subscribe if you enjoy these animated videos. Let's go. This video is not financial advice. To explain the S&P 500 index fund in short terms, it is the most commonly used index to track the U.S. stock market. It tracks 500 publicly traded, large-cap U.S. companies, which accounts for about 80% of the market. It contains 11 different sectors and is therefore obviously very diversified. These sectors are technology, healthcare, energy, utilities, industrials, consumer staples, materials, real estate, communication services, financials, and consumer discretionary. Out of these 11 sectors, technology is definitely the most popular, with about 28% of the S&P 500 consisting of this sector. There is a committee which selects the companies, and they must meet certain criteria to be eligible for the S&P 500. Most notably Tesla, the car company by Elon Musk, did not meet these criteria and was disapproved not long ago. The index is also rebalanced quarterly in March, June, September, and December. In January of 2022, the 10 largest companies in the S&P 500 were Apple, Microsoft, Amazon, Alphabet A, Alphabet C, Meta, Nvidia, Johnson & Johnson, Berkshire Hathaway, and United Health Group. So how do I invest in the S&P 500 for these nice profits, you ask? Well, you can't, but also you kind of can. You can invest in index funds or ETFs that are designed to closely follow the performance of the S&P 500. The most popular ones are Vanguard's S&P 500 ETF, ticker VOO, iShares Core S&P 500 ETF, ticker IVV, and SPDR S&P 500 ETF Trust, ticker SPY. Why is the S&P 500 so incredibly popular? First of all, since it's passively managed because it just follows the index, the fees to invest in it is very, very small. 0.03% to be exact, meaning if you had invested $1 million in, for example, VOO, you would only pay a yearly fee of $300, which is unbelievable considering the amount of money you have invested. Another reason is obviously that it is so diversified. Like we mentioned earlier, it contains 11 different sectors and 500 companies. Let us explain to you why this is amazing for you as an investor. Let's say you have invested $10,000 in an S&P 500 fund. One day the Netflix stock collapses and falls 20%, your fund has the Netflix stock, but you don't really notice any difference on your investment in the S&P 500. This is because your fund still has 499 other companies that are holding your investment stable. If Netflix had a bad week, but Apple gained 5%, then that might counter your Netflix stock falling and you won't really notice that one single stock had a horrible collapse. This is why the fund will basically never stop growing. It's like an amazing brotherhood, every single stock is backing each other up. The only thing that can make the S&P 500 fall a lot is if the general market conditions aren't good. Like right now, because of the war, the rising living expenses, and the inevitable incoming recession. So, should you invest in the S&P 500? We would say yes, as it is somewhat of an anchor of your portfolio. Keep in mind that this is the safest way to grow your money, but also one of the slowest. There are many growth funds that are made to beat the market, not track it. And most of them are very successful. Consider diversifying your investments into different funds, stocks, and other assets. Our perfect investing portfolio would look something like this. 40% S&P 500, 20% growth funds, 15% dividend funds, 10% individual stocks, 10% crypto, 5% cash for bloody days. If you're a newer investor, consider sticking to what you know about, feel safe about, and try not to over-diversify. When beginning to invest, you should try to calculate how much you need to invest and how much time it would take to reach your goal. To invest more money, we would recommend you watch our video about what to do when you get paid every month. We will leave a link to it in the description and in the video. Nevertheless, the S&P 500 is one genius invention, and it is Warren Buffett, the world's richest investor's favorite investment and fund. There are many videos of him mentioning that it is the safest and most reliable investment out there, and we sure do trust Warren about that. Leave a like and subscribe if you enjoyed this animated video. We hope you learned something new. Check out our channel for more. Thank you for watching.